All right, so what is going on, guys? It is Sleazy FX back at it with another video. This is going to be a update video. Where have I been? What's been going on? So if you guys haven't been noticing, haven't seen my previous video, I have been very active in the Telegram group. Link is going to be description. It's two parts to it. There's a regular chat group, and then there's a VIP group where I'm posting trade ideas. I post just weekly Zooms. We do live trade sessions. We do discussions. We do even weekends. We go over trades, go over our trading, see how we can improve everything. I post signals on there. I show you the trade idea, and then after that, I do a trade breakdown. On top of that, I do tips, and then I tell people how exactly I pass trades, and then the trades that I take to pass these challenges, like what's in front of you, I posted the trades in the actual Telegram. And it's 100% free. Everything's going to be free. So I highly recommend, if you guys are subscribing to this YouTube channel, to be subscribing and making sure that you're inside of the Telegram, because I'm way more active on the Telegram than I am on this YouTube channel or anywhere else. And this is the most recent challenge I just took. I took this week. I believe I passed it yesterday, if I can't remember, either yesterday or the day before. 40%, 47% win rate. It was a little bit higher. It was around a 60% or 50%. But when you do the point on ones and stuff, you're like losing trades. But you can see my average win was like 278, but it was way higher than that. And then as you can see here, the target, I made the target. This is the target I needed to make. This is how much I made. And I'm going to refresh the chart just to prove that it is legit. So I'll refresh it again. And it says phase 2 evaluation. So next week I will be trading on another 100K account. So, you know what I'm saying? I highly recommend you get into the Telegram, because I'm showing you everything about what's been going on. It's in that Telegram. And what I'm going to do is I'm going to share my screen so you guys be able to see the Telegram. And this is the Telegram. This what's been going on. I've been posting every single day. We posted 2 trades today. One was a loser. And then the next trade we took ended up going from 1 to 2. So, that second trade ended up making back that loss and still ending the day in profit if you secure from 1 to 2 risk reward. I did a trade breakdown, and I talked about more tips, just not just the trade breakdown. I go about more things, just not just the trade breakdown. And here's the stuff that I posted. You know what I'm saying? This is stuff that I've been posting on here, you know what I'm saying, to pass the 100K challenge. I literally go over everything. I post everything. It's 100% free. I highly recommend you join in. A lot of people have been loving it. Very, very active. 61 people is in there. I pretty much been gaining people every single day. And people are learning a lot of information that they wouldn't have learned without it. So I highly 100% recommend you get into the Telegram. I posted 2 1-8s, 1 1-10, a couple like regular trades, but we've been doing pretty well in the chat group. So, I'm saying, I just 100% recommend you guys join. And in this video as well, I just going to be talking about time frame correlation and why it's so important, and how you can use it to be more dynamic and catch more high probability trades, right? So I'm just going to show you US30. I don't trade US30, but US30 gave the prime example why time frame correlation is very, very important, and why many of you need to be paying attention to making sure that the lower time frames and the higher time frames are being in complete confluence. Just because the 30-minute could be saying buys doesn't mean that there's a buy setup. There's an entry on the 3-minute that you could be taking and using previous structure on the 3-minute to be marking up your stop loss, right? So, and what I'm going to do is I'm going to bar replay. I'm going to remove all the price action that happened before 9 o'clock and just identify structure, right? So what I'm going to do is I'm going to completely remove my chart and be like, okay, how could we could have identified structure, right? So what we could be looking at, right, is seeing how, okay, price is creating lower lows and lower highs this entire time, creating lower lows and lower highs, lower lows and lower highs, right? But the key signal was right here. So I'll go into more higher time frames so it's more clear. But as you can see, we're trading below that 50 SMA the entire time until price breaks structure right here. Price broke structure right here and created new highs right here. So when price comes down, this is simply just be creating a higher low. Price hits its support level, and then we ended up pushing back up, right? But as you can see, we're now trading above that 50 SMA. It's way more clear on the 30-minute time frame right here at this day that we're now trading above the 30 SMA, and this is right before New York session, stock market open for US30, right? And this goes for all pairs. This is just a prime example based off US30, right? Use this, watch this video, we watch it over. I did another breakdown of this in the Telegram. so you guys can get a different version of what I'm saying here to just have things more clear. But as you see, right, we're trading above that 50 SMA in the 30-minute time frame. So let's just ignore everything. Let's just take in the fact that we're trading above that 50 SMA right here. So if I just seen that off the 30-minute time frame, I'm like, okay, right? The 50 SMA, we're trading above the 50 SMA. We broke and retest the structure. So if I drop down to the 5-minute, what I'm going to be essentially looking for is confirmations. I'm going to be looking for confirmations, right? So when the stock market opens up, this is at 8:55. I wouldn't be looking for a trade yet, right? What I'm looking for is just time frame correlation, making sure that structure is now in confluence. So what do you see? You see that now we're trading above that 50 SMA off the 15-minute time frame, the 30-minute time frame, obviously the 15-minute time frame seeing the same thing, the 5-minute time frame seeing the same thing, even the 3-minute time frame, they're all seeing the same thing, that we're not trading above the 50 SMA. So the fact that we're trading above the 50 SMA on the 30-minute and on the lower time frames, that is enough for me to take the trade in confluence, right? Because I know that the current trend is in an uptrend, right? I know that this whole move pushing back down was to break structure, and you possibly probably have divergence right here. But we're not going to take into account divergence. So what I can do is I can draw my Fibonacci from this low to this previous high in confluence, because we have a higher time frame confluence on the 30-minute, right? And then we have a lower time frame confluence as well, where we're not actually trading below the 50 SMA when I'm taking this entry. So I can put my entry point right here, stop loss at this overall low, and then target my Fibonacci, or I can be targeting previous structure for take profits. So let's just say we're just targeting just our Fibonacci right here. So this trade would give us a 1 to 2.27 risk reward. And let's just say if price hits all take profits, we close out 50% of our entry and let the rest ride. So what happens today? Price hits all our take profits, right? And let's just stop it there, because I mean, we can just let the rest just play out. But let's just stop it here and we see how, okay, price has now hit all our take profits. And again, we had multiple formative confluences to take this trade. Now I'm going to show you how you could have lost this trade essentially, right? And this is what happened to my friend today, but I just want to give an example for him and for everyone else, how if you have a higher time frame potentially could happen, right? If you, let's just say you marked up resistance point, right, like this, and let's just say you see a resistance, and then you see a resistance point, and you're like, okay, we're creating lower lows and lower highs. Let's say you ignore all this other structure, which is completely fine. What you want to be looking for is time frame correlation. Okay, you identified potentially that price could be selling off, but what you're going to be looking for is correlation on the lower time frames. The higher time frames, it's like a hint. It's like whispering in your ear. It's like someone giving you a hint, like, yo, this is the hint, right? You know what I'm saying? We could be potentially selling off. It's like whispering in your ear. So what you want to be looking for is a confirmation. Your confirmation is price trading below that 50 SMA in the lower time frames. As you see, we not only broke structure on the trend line, we broke and retested the structure, right? If you look at the 5-minute, it's more clear, a little bit more clear. We not only broke this minor time frame trend line right here, this lower lows and lower highs, we broke this structure, but we ended up trading above the 50 SMA the entire time on the 15-minute time frame, on the 30-minute time frame, on the 5-minute time frame. All the time frames were just telling us that price wanted to go up. So again, I don't take a sell because the lower time frames aren't in confluence with the higher time frames. If it's going to sell off, all confluences are going to be happening. You're going to see multiple confluences on the 5-minute, 3-minute, 1-minute, and you're going to be seeing it in confluence. You're going to be seeing in confluence on the higher time frames as well. You know what I'm saying? If it's not, then wait for price to give you an entry, right? Same thing right here. Let's just say you were looking at the 30-minute time frame. You're like, okay, there's potentially could be sells, right? Let's remove all this day. Let's use the bar replay and let's remove everything. We see that we're trading below that 50 SMA. We now broke and retested. So you're like, okay, there's a potential that sells could happen. The 30-minute is giving you a hint that potentially we could be selling off. And this SMA that I'm using is the 50 SMA. Just for people who don't know that, this is the 50 SMA. And I'm like, okay, the higher time frames hinted that potentially sales could happen. So what I'm gonna be doing is dropping down to the 5-minute time frame and just waiting for structure to align with that, right? So what I'm gonna do is I'm just let the market play out and wait for us to be trading below that 50 SMA. Boom, we now broke the 50 SMA and retested. This is my entry. stop loss at the previous high. And if you need to go into a lower time frame, you can see it better on the 3-minute. And if you need to go on even the 1-minute, go on the 1-minute, right? You now seen what the 30-minute was telling you, right? We seen that the 30-minute was telling us that potentially sales could happen. What we did was we waited for the higher time frames and the lower time frames to be making sense to all say the same thing. If everyone's saying the same thing, then it has the highest probability of going down because there's no argument. There could be an argument that price could be selling off or could be buys because we're trading above the 50 SMA on the 1-minute, or let's say the 3-minute. We're trading above the 50 SMA. And that's the reason why you have a reaction, because there's an argument that price could be pushing up because you have a resistance, now form of support, and people bought. That's the reason why price went up. This reaction, this push right here is from retail traders or whoever, banks pushing price up based off that 50 SMA, stopping people out. But again, you only have a confirmation off the 3-minute time frame, right? You don't have a confirmation on the 15-minute time frame. We're trading below the 50 SMA on the 15-minute time frame. So again, this sell is not, I mean, this buy doesn't make sense because again, you may have a support, you may have a resistance now form of support. You may be able to, let's say, have your stop loss at this previous low right here. But if you go on the 15-minute time frame, you don't have a time frame correlation at all because we're trading below 50 SMA. And again, the higher time frames are most likely going to beat the lower time frames. It's not always going to be that way, but a lot of times, if the higher time frames, 15-minute is saying one thing, the 3-minute is saying another, which one you're going to pick? You know what I'm saying? Which advice you're going to take from the 15-minute or from the 3-minute? Think of the 15-minute as a 15-year-old. Are you going to take advice from a 15-year-old or a 3-year-old? I'm going to take advice from a 15-year-old versus a 3-year-old. You know what I'm saying? And again, if the 3-year-old is right, then I'll just wait for the 15-minute to say the same thing and vice versa. If the 15-year-old is right, I should be seeing the same thing with the 3-minute, right? So again, we look at the 1-minute and we get an entry. That's how you can take an entry off the 1-minute and not have it to be where it's like a low quality trade, because again, this is not a 1-minute trade. This is a 1-minute entry. There's a complete difference. A lot of people, they're just looking at what the 1-minute did and then they're just taking trades based off that. But again, structure is not following and aligning with that. But as you can see here, you see how the 3rd minute, we're trading below that 50 SMA, and then we can drop down to the 1-minute and wait for we get that entire correlation. And again, this doesn't give us an entry until 10 a.m. So this means this entire time, you're not in the trade for 1 hour, right? So let's say you wake up at 9 o'clock, you're not in the trade until 10 a.m. Stop loss is going to be here for roughly 1,800 pips. If you entered here, let's say you enter more aggressively right here at this wick, you have a 1,200 pip stop. And if you have, and if you want to be very aggressive, just have your stop loss at that previous lower high. Previous lower high, you have a 679 pip stop. Just round it off to 680 pip stop loss. And then you're just going to let it play out, right? So what we can do is now, if you want, just go off the 30-minute time frame and just let the market play out. As you see, price went from 1 to 8. You know what I'm saying? You have multiple confluences telling you the same exact thing. Look at this buy right here, right? So what we do is, if we go off the 1 hour time frame, we see how we're trading above the 50 SMA on the hourly time frame. So what I'm gonna do is identify structure, see, okay, we're now trading above the 50 SMA on the 1 hour time frame. So what I do is I drop down to the 5-minute. I want to see the 5-minute, the 15-minute, everything seem the same exact thing in order for me to take the trade. It's not always going to line that way. Some days it's going to be where price is kind of consolidating and then immediately break out. And if you don't want to take a trade, let's say right here, right at this breakout point, have your stop loss below the previous structure and just target a high right here, target previous highs where the supply zone is right here. What you can simply do is go on a higher time frame, and let's just say the 15-minute time frame, and just enter off the 50 SMA right here, and then just, you know, target something like that as well, or something like that, and just have your stop loss at one of these lower higher low points right here, and just target structure, you know, give yourself a little bit of room, let's say 1,000 pips stop from your entry, and then just target, you know what I'm saying, supply zone right here that price ends up reacting to. Same thing right here, you know, we're trading above the 50 SMA on the 15-minute time frame, right? So the 15-minute time frame, we're trading above the 50 SMA. So what I'm gonna be doing is, I'm not gonna be taking sells. If let's just say I'm on, let's just say the 3-minute time frame and there's no correlation, right? If there's no correlation between, let's just say we're trading below the 50 SMA in the 3-minute, but we weren't trading below the 50 SMA on the 15-minute, then there's no trade. You see how we're trading below above the 50 SMA on the 15-minute, and then you drop down to the 3-minute, you can still see the same exact thing. Then that's a high quality setup telling you that price could potentially going up because there's multiple time frames in the same exact thing, higher time frames and lower time frames. So simply what I'm going to be doing is putting my stop loss at certain points in the market where I feel like price is not going to hit. And if it does hit, it's probably a low quality setup to actually play out at that point where I feel like the trade is now dead. And this trade ends up going for 1 to 4. You know what I'm saying? This is an entry off the 3-minute time frame. Let's find more examples. So let's just say you were on the hourly and you see how price is creating lower lows and lower highs. So you now highlight this day. So this is the day we're looking at. So what we can see is if we use the bar replay, is that price is in a downtrend creating lower lows and lower highs. So potentially what the higher time frames is telling us is giving us a hint where price is going. The higher time frames is simply giving you a hint. That's all it is. If you see the higher time frames telling you this, looking at the hourly, the 30-minute, 15-minute, you're like, okay, I see price creating lower lows and lower highs. It's just a hint. It doesn't mean that for sure. It's not technically high probability just because the higher time frame is telling you something. You know, give yourself more confirmation. So what I'm gonna do is I'm gonna drop down to the 5-minute time frame and wait for price to be into my zone where I'm supposed to trade. And now that the market's gray, now this is a hot zone. Now this is where I'm starting to trade. This is where I'm start looking for entries. And simply what I'm doing is waiting for time frame correlation. Boom. Right when price trades below and retest that 50 SMA, that's my entry. We broke below the 50 SMA on the 5-minute time frame, retested it. There's my entry. Stop loss is going to be above right here at this previous high. And then I'm going to be targeting previous structure for lows. You know what I'm saying? Let's just say you target this support level right here. It's not to say that price is for sure going there, but that's just your target. So this is a 1 to 4.8 risk reward. And let's see price hits it. Price ends up hitting this target and you dynamically use time frame correlation to take that trade. Now, would we have taken this trade if price was trading above? No, because there's no correlation. If we're trading below the 50 SMA, right, on the hourly, but yet the lower time frames aren't seeing the same thing, then how it's going to go down? They all have to see the same thing. So as you can see here, here's a perfect entry Fibonacci move. And you could have entered here, here, stop loss. You could just have, if you wanted to, at this lower high point and just target that low right here, where this kind of demand zone is. And then you can just keep it moving. And then I'm going to show you today on US 30 for sales again, how, you know, if you identify a potential structure, but there's no correlation, there's no trade. So you can see how we're trading below the 50 SMA on the hourly time frame. You mark up a resistance. So now you have confirmation that at least off this time frame that there's a possibility of it dropping. But if I again go on the 5-minute and I see no intentions of price creating a lower high and lower lows and trading and creating lower highs and lower lows and seeing this potentially, so what I'm gonna do is invert the chart. If I'm not seeing this type of entry right here where we're now price breaks this mountain time frame structure and now it's starting to continue with the higher time frames is saying, then there's no trade. This is what I want to see if this is what I'm looking at on the hourly time frame. If I'm seeing resistance and I'm seeing how there's potential for sells, if I go and invert my chart and then I go on the 5-minute, this is what I want to see if I want to potentially take sales today. If I don't see that, then I don't take the trade. You know what I'm saying? So what I'm gonna do is, if you guys want, I'm gonna go on to a different pair, go on to gold, and show you guys again and again. This works on every single time frame. Every single time frame this works on. So again, right? Let's say you're on the 30-minute time frame. You see potential sells. Okay, cool. Now that I see potential sells, what I'm gonna be looking for is time frame correlation. So what I'm gonna do is drop down to the 5-minute time frame and wait for us to be trading below that 50 SMA. So if you didn't enter here because we still were trading inside this trend line, I guess right here. And for people who do trade it, cool. For people who don't, great. You could enter right here. But let's just say you do trade trend lines. If you did enter the trade right here, what you could have done is waited for price to simply just break and retest this trend line, stop loss at this previous high for a 37% pip stop loss. And then you can be targeting that form of support, that most recent form of support for a 1 to 2 risk reward, and price ends up clearing it, right? Why do we take this trade? Because the 30-minute is telling us that we're creating lower lows and lower highs. We have a break of structure, right? This is the break of structure. This is the retest. This is the move. This is breakout, retest, continuation. 1, 2, 3. So you see how we're trading below the 50 SMA on the 30-minute, and then we can drop down to even the 3-minute and still see the same exact thing. Now, this is a higher quality setup than us necessarily taking a trade up here where price is actually trading above the 50 SMA, right? If I'm looking at price and let's just say I see the 30-minute saying this, right? But I see the 3-minute saying, or if I see the 5-minute saying this. So again, just to repeat it so we're all seeing the same thing. If I see a resistance, right, I'm like, okay, I see resistance. Because not everyone is seeing the same exact thing. That's the reason why you have reactions at all different points in the market. While you're seeing resistance point and you're seeing how we're trading below that 30-minute SMA, someone else could be like, okay, I'm looking at the 5-minute. I see that the overall trend, let's just say he's looking at the 2-hour time frame and seeing how overall gold's been very bullish. So he's like, okay, hard time frames is telling me that we're going to be bullish. So what he does is this, he goes on the 5-minute time frame and then he marks up his lower highs like this or something. And then he essentially is like, okay, we broke structure. And then let's just say he's using that 50 SMA right here as an entry. He's not looking at this because this didn't happen yet. So what he does is he marks up his fib from this high to this low. And then he takes the trade. Why is this not a high quality setup? The reason why isn't because he's not trading with the overall trend necessarily. It isn't because he entered right there and right there. It's because he doesn't have really good time frame correlation. If he goes on the 30-minute, we're trading below that 50 SMA, right? It's not that really of a good trade. Now, again, if we go and look at another day though, how could this buy be way better than this buy, right? If you look at previous, before the market opened up at 9 a.m., right? Before that 9 a.m. candle opened up, what do we see? What do we see that's so important? We see us trading above that 50 SMA. So price is trading above that 50 SMA right here, right? This is very important. So that's already telling you on a 15-minute time frame, on a 30-minute time frame, we're all trading above. Every time frame is essentially saying the same exact thing. So when he drops down to the 3-minute and he's now seeing the 3-minute, now see the same exact thing. Now, if he would have took trades right here, right, this is a low quality setup because we're trading below the 50 SMA. So what I do is this, I draw out my trend line and I wait for price to break and retest the trend line, break and retest support, and wait for a retest of my 50 SMA. Now I have all confluences telling me one thing, buys, right? I already knew that the direction of the market was going up because the higher time frames gave me that hint. So what I'm looking for now is a lower time frame to say the same exact thing. So if I go on a 3-minute time frame and I'm seeing this look the same thing as the 30-minute looks like here, see how this looks the same thing essentially. Like if you go on the 15-minute time frame, this right here, this move, how price comes back and a retest looks the same exact way as if I go on a 3-minute time frame and look at this. It breaks it and then retest it, right? It looks the same exact thing. They look the same. So now I can mark up my structure and I put my stop loss at the previous formula of this low right here, pull out my Fibonacci, and this is probably a 764 rejection. Mark up from this low to this new high. You have an entry at the 764. You have that a confirmation. You have an uptrend as your overall trend of the move. You have price trading at the 50 SMA on a 3-minute time frame. You have multiple things telling you that price can be going up. So now I can enter there in confidence and then run this trade up. This is a way higher probability setup than this. Why? Because again, this only had a couple of confirmations. Yes, he's trading with the overall trend, but if he's looking through the time frames, there's no correlation. They're not all saying the same thing. We're trading below that 50 SMA versus how we're trading above the 50 SMA in a 30-minute time frame. So if I scale in on the 3-minute, or let's just say the 5-minute, right? Let's just say I'm on the 4-hour, and I'm like, all right, well, we're trading above the 50 SMA. So the 4-hour, we're trading above, we're creating higher highs and higher lows. And I'm seeing this support. I'm seeing that wick, right? And I don't know about imbalances and wick fills and all that stuff. So I see this wick and I'm like, okay, price retested it. So if I look at the 4-hour and immediately drop down to the 5-minute and I'm like, okay, let me mark on my fibs, right? And I'm like, okay. And what I'm gonna do is I'm gonna bar replay, I'm gonna remove everything, right? And let's just say you're like, okay, well, I already seen what the 5-minute did, right? And I draw my trend line. and I see how we broke, retested the trend line. Now we're pushing up. So now I'm like, okay, I'm marking up a Fibonacci move from this low to this high. Entry point is going to be right here, right at that 50. It's not a bad trade because you technically do have multiple time frame correlation, but it's only a B to C quality setup because again, the 30-minute is now saying bearish. But let's just wait. Let's wait for this trade to play out, and it hits stop loss. Why does that hit stop loss, but yet this trade doesn't? Because okay, now look at this. Now look at the 30-minute. We've been trading below. We broke structure. Yes, it's minor time frame structure. Yes, price can continue to go up, right, overall, but you can see how we broke structure. So price is most likely going to react because we broke and retested it. So there's probably going to be more sellers and buyers at this specific point of time in the market. That's the reason why this is a lower quality setup than right here, because when you look through the time frames, through the hourly, right, through the 2-hour, right, we're still trading below 50 SMA. Even the 4-hour, still trading above the 50 SMA, even on the 4-hour. Even the daily, we're trading above the 50 SMA. The 50 SMA is all the way down here. Every single one of my time frames are all bullish on the previous day before, right? This previous day before, every time frame was telling us bullish, right? And what I did was go scale into the lower time frames and wait for even the 3-minute and even the 1-minute to still say bullish, right? 1 minute still said bullish. Entry point could have been right here, could have been right here, could have been right here, could have been right here. All of them are all seeing the same thing, being bullish. This is a way higher quality setup than this one. So, make sure you're using time frame correlation. And, if multiple things are telling you the same thing, that's so you can have the highest edge in the market. So looking at this day, right? So let's just remove the chart. This is gonna be the last trade I break down before actually just calling it a day on this video. So again, right? We're like, okay, we see price break structure. Like, okay, cool. We're on the 30-minute time frame. But what does the 4-hour say? The 4-hour says that we're creating higher highs and higher lows the entire time. So I know that we've been bullish overall, and we just broke this minor time frame structure off the 30-minute time frame. So when I go on the 15-minute time frame, the 5-minute time frame, and I wait for my session to open up, right? I trade at 4 o'clock, right? I trade at 9 a.m. my time. I'm gonna mark up a Fibonacci move and take it. Mark up my fib from that to this point, right? And if I go on the 3-minute, it looks more clear. So let's just say you mark it up from this low right here to this high, entry point right here. And I use the 20 SMA. So if I add the 20 SMA, you can still see that there's an entry point, and then you're gonna have your stop loss right here, and you're gonna let this play out. Boom. Trade plays out. Trade hits all take profits. Why does this hit all take profits? Because all the time frames are bullish, right? So you want to be making sure that the 3-minute is bullish and the 30-minute is bullish. If the 15-minute is bullish, make sure that the, let's just say it's a trade, right? Where, the 1 hour, again, let's go to US 30 for the prime example. If you looking at the SMA, 50 SMA, and you're seeing it being bearish, right, off the 1 hour, there's potential, yes, that I can sell off. It's a potential. It could happen. It's a possibility it can happen. But what you want to be waiting for is that time frame correlation. Wait for a structure to be creating lower lows and lower highs off the previous 4-hour candle. Instead of price creating this new high and then coming down and giving you entry, price creates a wick, creates a lower high, and then price reacts and sells off. So you want to wait for a time frame correlation, off the 15-minute time frame. If you're looking at the hourly, you see how we're trading below, wait for the 15-minute time frame to say the same thing. So let's break this form of support, right? So let's break this form of support, come back up, and then potentially off, like, let's just say the 15-minute time frame, you mark up this lower high to, like, let's say down here, and then you catch a Fibonacci move versus us trading above the 50 SMA on the lower time frames, right? The 30-minute is saying bullish, the 15-minute time frame is saying bullish, the 5-minute time frame is saying bullish, and so on and so forth. So again, hopefully this video fully explains time frame correlation and why it's so important. Hopefully you guys joined the Telegram, and you guys seen I just passed 100K account, and I use asymmetric compounding in order to pass. And Link is going to be in the description for that video. You know what I'm saying? Check it out. It's going to be in the Telegram to join the asymmetric compounding. And hopefully you guys enjoyed this video. This is a quick update on everything. I'm going to be way more active on the Telegram than I am on this actual YouTube page. And hopefully this was informative and you kind of honestly see how you guys can win more trades by having time frame correlation with indicators using the 50 SMA specifically. So thank you for everyone who's been watching, and stay tuned for more content.